In this class we're going to talk about cost behavior. Now, when we discuss cost, we merely look into how cost is affected by fluctuations in the level of activity. A business may incur many costs and they may be classified them in various ways. For example, costs may be classified according to whether they remain constant, even though the volume of activity changes. We call these fixed costs. Or costs may vary as output varies. So we have two types of costs immediately. The fixed type, which doesn't vary as output varies, and the variable type, which does, which changes as output changes. In this class we're going to look at three main types of cost: fixed, variable and semi-variable costs. For example, the fixed costs in a restaurant will be the rent and owner's salary, whereas the variable cost will be the food and the overheads. So the more customers that go into the restaurant, the more food will be consumed. It's a variable cost. However, the owner's salary may be fixed, irrespective of the number of customers in the restaurant. And the rent paid for the premises may be fixed, irrespective of the number in the restaurant. Fixed costs always stay constant over a period of time, despite the level of output. These type of costs in a business include rent, insurance, cleaning cost, staff salaries. Generally speaking, they're fixed, irrespective of the level of output. Fixed costs are also called indirect costs, as they are not directly related to the product. Fixed costs have to be paid whether the business makes a profit or not. So they're fixed, irrespective of what comes or goes. A toy manufacturing company pays property insurance on in the amount of £2,000. This is a fixed cost which does not change despite the number of products produced. The company may produce 100 or 10,000 products, but the cost of the property insurance will remain £2,000 per year. So if we look at the table, irrespective of the number of products produced, the insurance remains the same. And if we were to graph that, it would just be a horizontal line, 2,000, and the number of products along the horizontal axis, 100, 200, 300, and so on. Irrespective of the number there, it will still be 2,000, so it's a horizontal line. Variable costs change with the amount of activity. When production output increases, so does the variable cost. Variable cost is also classified as direct costs, as these costs are directly associated with production. Now, types of variable cost include direct materials, direct labour, and let's say electricity. The more output that is required, the more material is required, the more workers that are required, the more energy that's required. The variable cost per unit of production stays the same. However, the total variable cost changes with the level of activity. Let's have a look at that. The toy manufacturing company needs raw material, variable cost, to produce its products. Each product produced requires £10 worth of raw materials. The raw materials for this product is purchased from outside suppliers. The production capacity for each toy is between 100 and 500 toys per year. So, if we look at the cost of raw materials, it's £10 per toy. If it makes 100 toys, it'll be 10 times 100, which is 1,000. If it makes 200, it'll be 10 times 200, which is 2,000. So the total cost is increasing. The cost of raw materials per toy remained the same. So if we graph that, we would find something like this. The diagram shows how variable cost increases as activity levels increase. In terms of the toy manufacturing business, the variable cost would include the cost of raw materials. As the level of activity increases, so does the cost of buying raw materials. It shows that the cost of raw materials stays the same, but the total change with the level of production. This would be the variable cost in the business. If the company produced 100, the total cost would be 1,000. So in a sense, the gradient of the line is 10. It's £10. Each toy costs £10. So just multiply what's on the horizontal axis by 10 to give us the vertical reading. If we take variable cost and fixed costs, which we had earlier, and we add the two together, we'll get total cost. We just simply pick up the variable cost and put it onto the fixed costs. The fixed costs happen irrespective of the level of output. So if nothing's produced, the fixed cost is still 2,000. If 100 is produced, then we add 1,000. It's 100 times 10, remember, to 2,000. So 100 times 10 is 1,000. 1,000 plus 2,000 becomes 3,000. If I put the cursor onto the screen for a second, it would be about there. There somewhere. Semi-variable costs. These can be a bit tricky. Semi-variable costs have both fixed and variable costs included in one amount. It is important to find the fixed and variable parts of a cost in order to find the full cost of a cost, or full cost of a unit. So it's important to find the fixed and variable parts of the cost in order to find the full cost of a unit. Well, the diagram we've got here is the one we had earlier. We had fixed costs and variable costs. And along the bottom, the level of activity, the amount of production that takes place. Labour costs can be seen as fixed and variable. For example, an employee in a company has a fixed wage, which is received every month, which is the fixed element. However, the employee may be asked to work overtime, to work extra hours for extra remuneration. That's a variable cost. When the manager identifies a semi-variable cost, they need to know how much of it is variable and how much of it is fixed. When they have identified this, they will be able to determine cost incurred at relevant activity levels. In other words, managers need to know what is fixed and what's variable so that they can be more effective managers. They can control the variable perhaps, but they can't control the fixed. It's fixed. Past records of costs and their associated activity levels are usually used to carry out the analysis. The main method used to distinguish between fixed and variable cost is the so-called high and low method. So what we're going to try and do is take a figure and decompose it into fixed and variable costs. The method requires the use of the highest and lowest activity levels from the past. The information will then create the cost formula to find fixed and variable elements within the cost. So we're going to take high and low levels of activity and try and work out from them the fixed and variable elements. Now the steps to follow here, well, first of all, identify the highest and the lowest activity levels from past records. If we're going to use the highest and lowest method, it's obvious we're going to have to look at the highest and lowest activity levels. Second, find the difference between the highest and lowest activity levels and also the difference between the cost incurred of both activity units, or both activity level units. We then need to find the variable cost per unit. The formula we use here is just simply variable cost is equal to cost divided by units, which is the variable cost per unit. It's like working out an average. It's like working out just simply the cost per unit. Lastly, we need to separate the cost, and we do this by using another formula. Total cost is equal to variable cost per unit times units of production plus fixed cost. Again, if you look at that, it's very straightforward. The total cost is equal to the variable cost per unit times the number of units. So it gives you the total variable cost plus the fixed costs, which must equal the total cost. Okay then, so let's look at an example. We'll take this example. Our company has recorded data for semi-variable cost as we've got here. So we've got the highest level of activity, which is in February, and the lowest is in May. In February, activity was 2,450. Let's say 2,450 units produced. In May, 1,750 produced. The cost in February was 41,150, and the cost in May was 36,250. Now, from this information, we need to work out the fixed and variable costs. So, what we do is we look at the differences between the activity levels. So there's 700 difference. Subtract May from February, 700. And subtract on the cost side, and we get 4,900. Now, step 3. Simply take the 700 units, which is that. We now find the variable cost per unit, and we do this by dividing the difference in total cost by the difference in production. So the variable cost per unit is £4,900 divided by 700, which is £7 per unit. Go back to the previous slide for a second. All we've done here, with the cursor on the screen, all we've done here is we have taken 4,900 divided by 700 to find the cost per unit. Now, number 4. The variable cost per unit is £7, and we also know that the fixed cost does not change despite the level of activity. It stays constant. It's fixed. In order to find the fixed cost, we must subtract the estimated variable cost from the total cost. Remember, total cost is equal to variable cost per unit times the number of units. So the variable cost per unit times the number of units gives us the total variable cost plus the fixed cost, which is the total cost. Now, if we look, let's say for February, I'll put the cursor on the screen again. Look for February here, we have 41,150 total cost. The variable cost was 2,450 times £7, which we worked out as the variable cost per unit. Multiply 2,450 by 7, we get 17,150. So if we subtract, that means the fixed cost here is 24,000. Over here, we'd have the total cost in May of 36,250. The variable cost is, well, there's 1,750 produced times 7, 12,250, and if we subtract it, we get the fixed cost of 24,000, which is what we got for February. So the method seems to work. So in this class we've got fixed costs and variable costs, and we have semi-variable costs. So we have 3 types of cost discussed, and that's all we need to do in this class. So thank you for watching.